Hello and welcome to today live synthetic trading section with Vetexx. Okay, on today episode we are going to be analyzing the synthetic market using pure technical analysis and price action. So if this is your first time of coming across this channel, my name is Vetexx, and what I do on this channel is that every day from 6 a.m. to 7 a.m. I analyze the synthetic market using technical analysis and pure price action, break down the analysis, basically showing you how I trade every day and how I see the market and what I look out for in the market. And if there's a trade, we'll take together. If there's no trade, we'll anticipate. Okay, so that's basically what I do every day. And if this is your first time of watching this channel, you're coming across this channel, don't forget to like, don't forget to subscribe, and most importantly, join our Telegram channel so that whenever post an update, you'll be the first to see it. Okay, so what we are going to do right now is I'm going to be sharing my screen with you so that you see how I basically analyze the market and you can also learn and get value from it. Okay, and if you have any question at the course of the analysis, don't forget to drop your question in the comment section as I'll do well to answer them. All right, so without wasting much of our time, I'm going to dive right into the charts and show you basically everything we have on the synthetic market today, and let's see what is going to come out of it. All right, I'll see you there. So let me share my screen right now and then you can start. So every day from basically the synthetic pair we analyze every day is the volatility indices and the step indices at the moment. Okay, so these are our top pairs on our watch list, and that is what we look at for every day. There are about 14 in number, about 10 volatility indices and 5 step indices. So we look out for those pairs. Those are the ones that are on our top list. Currently, we do not analyze jump and boom and crash, but as the demand comes, in time to come, I think we'll consider analyzing that too. So let's check the first pair on our list today and let's see what we have. Okay, let's see what we have. So if today is your first time of coming across this channel, the model we trade is called the advanced market structure. It's the advanced market structure whereby we look at for structure and then liquidity. Okay, which is basically something like this. I've already explained this countless times, but for the sake of you guys joining for the first time, in case you see me marking out structure, this is exactly what I'm looking at for. So the advanced market structure, I'm going to draw out the model and then explain few things for you, and you can catch up from there. But the system basically I've already teach it in my on this channel. If you go to the playlist of this channel and then go to advanced market structure, all the topic that concerns this trading system, I've already explained everything. Okay, so for my explanation here, if you don't get it, you can always go back to that video or the previous live session that I've held, and then you can get something from it. Okay, but before then, let me quickly rush through it. So basically, we have 5 rules that guide this trading system, which is number one, we have a price creating higher high, higher low. Take for example, you want to sell, okay, and then once we have this high here, it becomes our what liquidity, and price need to sweep it, okay, to give us a protected high. Okay, now price sweep it to give us a protected high. Now this becomes sweep of liquidity, and then this newly created low, price need to take it out to give us what our first break of structure, which is going to be like this. The price has taken it out, this becomes our first break of structure. Now price will rotate 50% to give us what structural liquidity, which is this. Okay, price has given us our structural liquidity. Now this low here need to be taken out. All right, this low here need to be taken out. Once this low is taken out, all right, we consider this low as our what second break of structure. Okay, now this is our second break of structure. All right. Now, price will retrace what 50%. Okay, to give us what our what to take out this newly created high. All right, and then continue to the opposite direction. Okay, so this is basically the five rules. Okay, now rule number one for this advanced market structure, we have what sweep of liquidity, which is here. So I'm going to mark it. All right, we have sweep of liquidity. This is our sweep of liquidity. All right, this is rule number one. Then price will retrace back to take out this newly created high. Remember, this trading model has what two. It must have two break of structure and then two liquidity, and the two liquidity must be taken out. Now this is the first liquidity here, which is here. Sweep of liquidity that has been taken out to give us what this protected high that we have here, right? This protected high that we have here. All right, now price will retrace back to take out this newly created low after sweeping this liquidity. Now this becomes what first break of structure. All right, this becomes first break of what structure. Now price retrace 50% to give us what structural liquidity. Now that price has given us our structural liquidity, we mark it. Okay, remember this is liquidity one, liquidity two, first break of structure. Now price retrace again to take out this newly created low to give us what our second break of structure, which is this. All right, now this is it. Okay, now the whole of this zone from this protected high to this structural liquidity. Now let me explain something fast for you. This first sweep of liquidity is called transactional liquidity, which is used for correction. Okay, and then you can this structural liquidity. It is used for what continuation. That is why whenever price take it out, it will continue to the opposite direction. So the whole of this point becomes what our point of interest. This is our point of interest. All right. Now this is your point. So after price take out this liquidity right here, okay, it continues to the opposite direction, which is our rule number five. All right, this is our rule number five. So rule number one, we must have sweep of liquidity. Rule number two, we must have break of structure. Rule number three, price will retrace 50% to give us what structural liquidity. Rule number four, there must be a second break of structure. And rule number five, price will take out this newly created high here to give us structurally to give us to continue to the opposite direction. So this is what we look out for. So this thing you look out for whenever you want to buy, all right, is the same thing you look out for whenever you want. Sorry, this same thing you look out for whenever you want to sell is the same thing you look out for whenever you want to buy. Okay, so this is it. Now remember, this is what I'm always going to be looking out for in the market. So I'm going to be marking sweep, this, that, sweep of liquidity, break of structure. So whenever you spot it, you can easily, whenever you spot it, it becomes more clear for you to understand. All right. Now, there's something more. Before you can't just go into the market and start marking out this structure because this structure always appear in the market. So for you to be on the safer side and to trade professionally, you do what they call top-down analysis. Okay, you do what they call top-down analysis. So uh, there is an image I'm going to share with you guys. Let me let me check something. There's something I posted in the community yesterday. I think I'll have to share that. I'll explain something for you guys. So this is it. Okay. Uh, sorry for a moment. Okay. So let's continue. So this is top-down analysis. Now, take for example, you want to do your top-down analysis on a particular pair. You start from the weekly time frame to the daily time frame. Okay, those are the higher time frame structure. They give you what direction. All right, they give you direction. So once you have this structure on the daily time frame or on the weekly time frame, right, the next thing for you to do is go down to the 4 hour time frame or the 1 hour time frame and still spot out this uh, continuation on the 4 hour time frame. All right. Once you spot it out on the 4 hour time frame, you then go to the 15 minutes time frame before you can start taking your trade. So this is definitely going to be something like this. Okay. Let me remove this and then make it a bit bigger. So this is basically how to do top down analysis using any type of strategy you use at top. Now, take for example, this is the whole strategy with the advanced market structure. We have what we have sweep of liquidity. Now this becomes a break of structure, 50% retracement, price taken out, it giving us a second break of structure. Now this becomes our what point of interest. All right, this becomes our point of interest. Let me mark it out real quick and show you how to do top down analysis. So when I start marking out those structure during the course of the other analysis, it will not be something strange to your eye anymore. So just stay with me and let me just show you something real quick. This is going to really help you. Maybe you can just do the analysis by yourself later on. Okay. Remember, this is first break of structure, and then this is our second break of structure. Right. Now, if you are doing top down analysis, take for example, this is your weekly time frame. All right. Let's have this time frame as our what? Weekly or daily. Now, this time frame is our weekly or daily, right? This POI is our weekly or daily. Now, we know that this is the starting point for this pair now, and this is the finish point for it. Okay. This is the starting point, and this zone here is the finish point. Okay. Now we spot this setup. This is our structure on the daily or weekly time frame. What do we do next? We go to the 4 hour time frame and look out for this same pattern. So let's take for example this POI is the 24-hour POI or daily POI. Now we are going to scale down to the 4 hour time frame and look out for this same structure, which is going to be something like this. Okay. Now this is the continuation it gives us on the 4 hour time frame. All right. Look at it very closely. Now this is the 4 hour time frame continuation. All right. It has given us another continuation on the 4 hour time frame. This could be on the 4 hour, this could be on the 1 hour. Okay. Now we have this as 4 hour or 1 hour. Have this as 4 hour or 1 hour. Okay. Now if we got this is the higher time frame. Okay. This is a direction. We already know that no matter what, no matter how long it takes, price is going to start selling from this point and then it's going to get to this point. So this is the direction. Now, on this point, we already know that the trend is bearish on the weekly and the daily. There is no need for us to buy anymore unless this is on the buy or this structure is on the buy. So now that we know that on the weekly time frame and the daily time frame is bearish like this, and the target is here, we are not going to be buying this pair anytime. We are not going to be buying this pair anytime soon because the trend is bearish. All right. Now we spot our continuation on the 4 hour time frame because we cannot enter a trade on the weekly or daily. We have to go to the lower time frame, which is the 4 hour and the 1 hour time frame. Now that we spot the 4 hour and the 1 hour time frame, and there are some 4 hour trade that take days for it to smash the target. So once we spot this on the 4 hour time frame, what do we do again? We scale down to the 30-minute or the 15 minutes time frame to look at continuation. So from that point, we can start executing the trade. Okay. So once we see this on the 4 hour, this same pattern on the 4 hour or the 1 hour, we go to the 30-minute or the 15 minute and then look out for our continuation, which is going to be like this. This is the time we start executing our trade. Okay, price will come to this POI and then sell to the opposite direction until this 4 hour target is taken out. Remember, until this 4 hour target is taken out. So once this 4 hour target is taken out, you wait for another 4 hour structure or the 1 hour structure. Then you go to the 15-minute structure and start selling again. So this is it. So this is it. It's quite simple, right? So you have your first break here, second break here, sweep, first sweep, protected high. Then This is basically it. Now this time frame is going to be the 30 minutes to 15 minutes or 10 minutes. Okay, 30, 15, 10 minutes. Okay, this time frame they are the 30 minutes, 15 minutes, or 10 minutes. Now this trade you can easily hold it for 3 hour, 4 hour, and then your TP will be smashed. Okay, so on the weekly time frame, you go to the 4 hour time frame or the 1 hour time frame, and then you see a continuation on the 30 minutes, 15 minutes. That is the time you begin to execute. Okay, and if you go to the playlist of this channel, I've already explained confirmation entry, what you need to look at for when price come into your point of interest, and then before you execute on the trade. Okay, because there are some time price will come into your point of interest and then it will not give you what you want. So this same thing you do whenever you want to sell is the same thing you do whenever you want to buy. It's the same approach. Okay, now that I've explained this whole thing for you, let me go. We are going to start marking out those things on the chart right now. So on V25 1S on the weekly time frame, okay, on the weekly time frame the trend is bullish. Okay, on the daily time frame the trend is bullish, but it didn't give us a structure on the daily time frame, and it didn't give us a structure on the weekly time frame, on the 24-hour time frame. So what do? We go to the 4 hour time frame and check if there's a structure there. Okay, and check if there's a structure. Once we spot our structure, it will be more easier for us to start anticipating. Okay, now on this trend like this, we have our structure on the 24-hour time frame, but price has not tapped into the point of entry. So first of all, we have what? Sweep of liquidity, which is here. We have our sweep of liquidity. Now this is a buy structure. Sweep of liquidity. We have our first break of structure, which is here. Now price retrace 50% to give us what? Structural liquidity, which is used for what? Continuation, which is here. All right, and then we have price taking out this newly created high to give us what? Our second break of structure, which is this. This is our second break of structure. Now this low here becomes our what? Protected low. So the whole of this zone becomes what? Point of interest, which means price need to come and take out this. Price need to come here. All right, take out this uh, structural liquidity, give us a continuation like this on the 4 hour, like I always explain, on the 4 hour, which is going to be something like this. Okay, once you give us this continuation on the 4 hour, all right, which is going to be something like this. Now this becomes our point of interest on the 4 hour or the 1 hour. All right, this is our, this becomes our what? Uh, First break. This becomes our second break. Remember, this is what we're anticipating now. If the price is going to definitely actually going to come down here, so and then we'll anticipate a continuation on what? On the 15 minutes. This is the time you can start executing, start looking for setup to take. Okay, then to come to the POI and then start buying to the opposite direction. So this is it. You're just spotting the same thing from the higher time frame to the lower time frame, then you execute. Okay, from the weekly, daily, which is used for your direction, the 24, the 4 hour and the 1 hour, use that as your structure, and then the 30 minutes, 15 minutes, 10 minutes, these are where you look at for your setup. Okay, so this is, then you can start buying to the opposite direction, which is gonna be like this. Start buying to the opposite direction. So this is basically the whole system. This is basically the whole thing. It's with sweep of liquidity, break of structure, structural liquidity, second break, price tap into the POI and start moving to the opposite direction. Now this is what we have on VT. Now we already have this already. We already have this POI right here. Okay, and then we are going to, let's go to the 4 hour time frame. If we are going to spot any setup, because there was a buy we had yesterday on a V this on this same pair. Okay, so if you open your eye clearly, you can see we have on the 4 hour time frame we have what? A sweep of liquidity, which is here. We have a sweep of liquidity here. We have our first break of structure, which is this. We have price retrace 50% to give us what structural liquidity, which is used for continuation. Price needs to take it out and start moving to the opposite direction. Yeah. And then we have what first break of structure, our second break of structure, sorry. And then this zone becomes what point of interest. Now the whole of this zone, this is our protected load, the whole of this zone becomes point of interest. Then price will do what? Take it out and continue the move to the opposite direction. Remember, this is our starting point, and this here is our finish point. So this is our starting point, this is our finish point. So what do we do now that this price is bullish on the 4-hour time frame? We'll go to the 15 minutes time frame and check if there's a continuation for us so that we can mark it down and start waiting for it. All right. Now, the 15 minutes time frame, what do we have? Yesterday on the 15 minutes time frame, price gave us exactly a good continuation setup. Okay. First of all, you can see clearly this is what you are looking at for. Okay. This is already clear enough. You can easily spot it right here. So we have what our sweep of liquidity, which is this. I sent the setup to the community yesterday, and also I explained some few things about how I got the setup yesterday. This is our sweep of liquidity, first break of structure. Price has retraced 50% and has given us a 50% retracement, which is our structural liquidity that need to be taken out. And then this is our what protected low. Right here is our what second break of what structure. Now this complete our 5 rows. This is the 4 row now. The 5th row now is our price. Now this zone is our point of interest. It's point of interest here. Now the 5th row now is that price will have to the 5th row price will have to come into this zone. All right, give us a confirmation and then start buying to the opposite direction. So this is what you anticipate for the 5th rows to complete. Okay, you're anticipating this move on the 5th row to come into this zone and then start buying to the opposite direction. This can easily give us 1 to 8 RR, 1 to 10 RR, but don't exceed 1 to 4 RR. Okay, so uh, that is the only risk to reward I do. So you can clearly see, all right, I've already dropped this setup on the community. So if you are here to join the community, you can easily join the community and then help yourself with it. So you don't miss out on trade, when to enter trade, when to avoid some trade and all of that. Okay. So you can basically see that the illustration I just did using that diagram is the same thing I'm doing on the chart here. So just for you to open your eye, pay close attention, you can spend your time study and then you start getting this thing clearly. Do your analysis from the higher time frame to the lower time frame and then you execute your trade. Okay, so when the trend is bearish, you flow along with the bearish until the target is taken out. When the trend is bullish, you flow along being bullish until the trend is taken out. So that is basically how the trade. Make the whole thing simple for yourself so that you don't force setup. Now the next pair we are going to be checking is V100 volatility 100 index. Okay, on volatility 100 index, the pair has been bearish for a while and it's been consolidating on the 24-hour point of interest. So the first thing we have here is, first of all, we have our break of structure. I already mark it out. Our sweep of liquidity, which is this. Okay, this is very clear enough. We have our sweep of liquidity, which is this, and then price give us our protected high here and retrace to take out the newly created low. After taking out the newly created low, we have our first break of structure, which is this, right? Which is this, and then price retrace 50% to give us for structural liquidity. After giving us the structural liquidity, all right, it retrace again to take out this newly created low to give us what our second break of structure. Okay, so whenever you are doing your analysis, first of all, you must see this sweep of liquidity. You must see your first break. You must see price will retrace 50% to give you your structural liquidity, and then price must give you what second break of structure. So this is how I got my structural liquidity. I will use my Fibonacci retracement. Put the Fibonacci at the top of the protected high and then drag it to the low to the second break of structure side. If it crosses 50%. If this thing crosses 50, it simply means look at it. So this is 0, this is 0.5, this is 0.7, this is 100. So if this thing crosses 0.5, it simply means the retracement is up to 50%. But in case it doesn't, maybe it's somewhere here like this, then the retracement is not valid. So this is it. So my Fibonacci setting is like this. Let me just show you my setting. It's just you mark, you untick everything and leave 0, 1, 0.5, and 0.7. So these are my Fibonacci retracement setting. You can always come back to this video and then you do your own setting like that. Okay. So now that we have our structure on the 24-hour time frame, what do? We go to the 4-hour time frame and start anticipating this same type of structure on the 4-hour time frame. Okay, we're going to be anticipating this same type of structure on the 4-hour time, because now this is the starting point on the 24-hour and this is the finish point. We are not going to be entering this trade on the 24-hour. Okay, we are going to go to the 4-hour time frame or the 1-hour time frame and see if price has given us continuation on those time frame. Once price give us continuation on the 1 hour or the 4 hour, that is when we can start looking for setup on the 15 minutes. Okay, you see how the whole thing is taking step by step by step by step before we come down to the main place we're going to enter. And this is going to actually help you avoid a whole lot of losses. So you can see on this 1 hour time frame, we don't really have anything yet. There is nothing on V100. So we are going to start waiting until price form on the 4 hour or on the 1 hour before we can go to the 15 minutes or the 30 minutes or the 10 minutes before we can find our setup. Okay, so that is what we do. Now we are going to go to the next pair on our list, which is what? I think the next pair on our list is what? V10S. Now V10S has been bullish on the weekly time frame. All right, has been bullish on the weekly time frame. It has not smashed it yet, but it gives a continuation on the 1 hour time frame. I've already marked it out yesterday. So this is our sweep of liquidity, and then this is our what? This is our sweep of liquidity. This is our break of structure. Price retrace 50% to give us what? Structural liquidity, and price take out the newly created high after it give the structural liquidity. Now after taking out the newly created high, this becomes what? Our second break of what? Structure. 8th ditch. It at 8th ditch. You say good, AJ. You're welcome. This is your first time, you're welcome. Okay, so now we have, this is our first break of structure, this is our second break of structure. Now this zone becomes what? Point of interest on the 1 hour time frame. So now after this 1 hour time frame, what do? We'll scale down to the lower time frame and then start looking for continuation. Now let's go to the 15 minutes time frame. If you didn't see any continuation of the 15 minutes, we go to the 10 minutes time frame and see if there's any going to be any continuation. Remember, this is the starting point. This is the starting point, and this right here, this top here, is our finish point. Okay, and I already see a setup. Okay, there's a setup. Let me go to the 10 minutes time frame. I think it will be more clear there. You already have a setup here. Okay, I think 10 minutes is more of this. Okay, this, let me just use 5 minutes for example. Okay, you can see we already had a setup that played out yesterday, which is this. I didn't share this setup yesterday because it didn't do up to 1 to 3 hour or 1 to 4 hour. So we need to be taking more of high risk to reward trade and low risk to reward trade. So we have sweep here and we have our protected low here. Okay, so if you are following me now, you can even use your eye and mark it. Okay, it's as simple as that. Okay, secondly, we have our first break of structure, which is this. We have price retrace 50% to give us what? Structural liquidity, which is this. And then price take out the newly created high to give us what? Our second break of structure. This is our point of interest. This becomes our point of interest. So this is the lower time frame continuation. So you get your direction from the higher time frame and then you do your execution on the lower time frame. So this is the full target. You see that price smashes the target yesterday. All right, price smashes the target. So this is what played out yesterday on V10s. Okay, now the direction has not been taken out yet. The overall target has not been taken out yet. So we are going to uh, check if there's any continuation here. So currently we don't have any continuation on the on V10s. So we are going to be sitting on our hands and then watch out for more continuation. If what you are looking for comes out, fine. I'll mark it and I'll share it in the Telegram community. So if you are yet to join the Telegram community, make sure you do today. Okay, it doesn't matter the numbers of people that are there, it's for your own good. Okay, you don't miss out on trade. You always ask questions whenever you need help and all of that. Okay, so this is what we don't have anything on VTNS at the moment. So this is almost 6:31. So let me just hurry up and then run through the other pairs and let's see what we have. Okay, so with 75 1 index, volatility 75 1 index, we have a continuation. Okay, so spotting this with your eye, you can easily see that this is what we have on this 75 index. It's clear enough because once you see this, you can never unsee it. First of all, we have our sweep here, sweep, which is rule number one. Rule number two, we have what first break of structure. Rule number three, price retrace 50% to give us what structural liquidity. Rule number four, price take out the newly created low to give us what our second break of structure. This zone here becomes our protected high, and this zone becomes our point of interest. Rule number five, price take out this structural liquidity, tap into the point of interest, and continue its move to the opposite direction. Now this is going to be the finish point. This is the starting point and this is the finish point on the 24-hour time frame. Now the 24-hour time frame has given us a direction that no matter what it takes, stick to the sell until price take out this target. Keep buying, keep selling until this target is taken out. So any buy you are going to see on this pair now, you shouldn't be interested in it because price has already given you that direction. Okay. Now let's go to the 4-hour time frame. If you see a continuation of the 4-hour time frame, you already had a continuation which is being marked down. All right. Now this is the continuation. First of all, we have our sweep of liquidity, which is rule number one. Second of all, we have our what first break of structure, which is rule number two. And this is our rule number three. Price retrace 50% to give us what structural liquidity. And rule number four, we have was our second break of structure. So what do you anticipate? You anticipate price to tap into this point of interest and continue to move to the opposite direction. Okay. So when price tap into this point of interest on the 4-hour time frame, we can then come to the 15 minutes or 30 minutes time frame and start looking for sell to the opposite direction until this 4-hour target is taken out. Then we'll stop looking for sell. Then we'll anticipate another 4-hour structure or 1-hour structure to form. Then we can go to the 15 minutes time frame and start looking for this same pattern. On this same pattern, the 15 minutes, when price come into the point of interest, we'll look out for our continuation, our confirmation entry, and then enter the trade based on our risk. Okay. Now, if let's take for example, this is the 15 minutes time frame. Okay. Once price tap into this point of interest on the 15 minutes time frame, this low here is going to be our take profit level. All right. So if you want to, if you trade 1 to 3, 1 to 3 is like from here to here, you put your TP. If you want to trade, it's like from here to here or here to here, you put your TP. Your TP must not necessarily be at this low, but this is where the price is definitely going to come to. So if you are a risk to reward trader, you can just set your TP to wherever your risk to reward is and then take your trade and walk out of the market. That's what it has given you. So, but now this is the 4-hour time frame. We are not going to be executing when price tap here until give us a continuation. Now let's go to the 1-hour time frame. If we can spot any other thing on the 1-hour time frame. So on the 1-hour time frame, we can also see that we have another continuation, which is this. So open your eye clearly. We have what? We have sweep of liquidity here. All right. We have a sweep of liquidity. All right. We have break of structure, which is rule number two. We have price retrace 50% to give us what? Structural liquidity. All right, which is this rule number three. Then price retrace to take out the newly created low, which is this. This is our second break of structure, which is this. Yes, this is our second break of structure. All right, and then these zones are what? Protected high. Now this protected high means price shouldn't go above it. Okay, that's why it's called protected high. Now we have what? Point of interest. So what are we anticipating? Anticipating price to tap into this zone on the 1 hour time frame and give us a continuation on the 15 minutes or 30 minutes time frame before we can then start buying. Before we can start buying. Okay, let me remove this. Anticipate this. Okay, now this is the zone, then price will start selling to the opposite direction. So this is what we anticipate. Once price do this, go to the lower time frame, look out for your continuation, and then you start selling. See, one thing you should know is that it is good to enter trade on the hourly time frame, which is very good. All right, which is very good. But the reason why you need to scale down to the lower time frame is just for you to have an extra confirmation that okay, price is truly going to sell. Because there are several occasions whereby you can put your limit entry at this point of interest, can put your limit entry at this point of interest, and then price will come, will react from it, and then move to the opposite direction. Remember, if you are risking, let's say you have a $20 account, you are risking $20 to make $100, or let's say $150, $200 on this 15-minute structure. You can risk the same $20 and make up to $300. But the thing is, you are going to be in much drawdown than the week that in this hourly time frame, and price might take you out because there's no extra confirmation, okay, that yeah, holding that the price is going to actually sell. The reason why you come to the 15 minutes time frame or the 30 minutes time frame after price tapping to the 4 hour, 1 hour time frame, it's just for you to have an extra confirmation that price is going to sell, selling from here. Once price just come here, you don't just jump into the trade and start selling. Majority of the time it doesn't end well. But if you are patient enough to wait for this lower time frame to form, you have more chances of taking more trade, having more confidence in the trade, and then you can sometimes you can catch up to 3 to 4 continuation before price smashes the target. That is why it's always good to always scale down to the lower time frame. Be patient enough. All right. There's so much. See, you have to have this abundant mindset that there is always trade in the market. Okay, you're not really missing out on any trade. There's always trade in the market. So always wait for the perfect time, and then always take your trade at the right time. All right. So now let's go to the next pair on our list, which is V100S. Let's check out what V100S is doing. And if you see something good, we're gonna take something good here. So first of all, from the 24-hour time frame, V100S is bullish. On the weekly is bullish as well. And then we have a continuation on the 1 hour time frame. We've already marked it out yesterday, which is this. All right, so you can open your eye clearly, you can easily spot this work of art. Okay, so this is what we have. We have this sweep of liquidity here, which is this sweep of liquidity. We have break of structure, which is this, and then we have price retreat 50% to give us structural liquidity, and then it retraces back to take out the newly created high to give us what second break of structure. Now this zone becomes what? Point of interest. And this becomes our point of interest, right? After this point of interest, price is gonna tap into this zone. Anticipating price to tap into this zone. Okay. I need to create something. So price needs to tap into this zone Once price tap into this zone, it will continue the move, start giving us series of 15-minute continuation in such a way like this. Then we can start buying series of higher high, higher low, higher high, higher low, and then we can start buying. Okay, we can start buying to the opposite direction until price take out this target right here. Okay, so this is what we're anticipating. So we wait for this. So basically, this thing is actually very simple if you agree with me, because what you look at from the higher time frame, you already get the direction. The higher time frame will give you a direction. Then you go to the lower time frame, you start looking for the same thing. Okay, and we can also consider this. This place price is currently. We can also consider this because if I'm going to mark out this is going to be a B plus setup. Okay, and we don't take B plus setup. Why? Because this is only going to have one break. Okay, because if I mark out this break of structure here, let me explain why this is going to be a B plus setup. If I mark out this break of structure here, all right, we won't have another break of structure because this is higher than this break, which is something like this. Okay, you can see if I mark out this, there won't be this. So this is a B plus setup. So we are going to be waiting for price to come into our A plus structure here. Okay, let's going to come into our A plus structure before we will continue to move to the opposite direction. So this is what you're anticipating on V100S. If price does this, we'll wait for it. But if it doesn't, we are going to sit on our hand. So let's go to the next pair, which is V50. So from V50, V50 has been bullish on the has been bearish on the daily time frame. Oops, it just matches the target on the daily time frame. So V50 just continued, just finish the assignment. So first of all, we have the sweep here. Second, we have break of structure. Thirdly, we have sweep of structural liquidity. We have what? Our first break of structure. Second break of structure, sorry. We have our second break of structure. And then this becomes our what? Protected high on the daily time frame. Okay. The whole of this one becomes what? Our point of interest. And price that smashes the target on the daily time frame. So we don't have anything on V50 at the moment. You can see. Price just smashes the target on the daily time frame. Okay, price just smashes the target on the daily time frame. So right now we can go to the 4 hour time frame or the 1 hour time frame and see the continuation. But then now that price has done this, let's go to the 4 hour time frame and see if there's any continuation that we are going to start anticipating. So we have a 4 hour structure here that we are going to anticipate price to come to as the newest POI that we are going to start taking trade for. So this is our sweep of liquidity, the second break, first break of structure. Price retrace 50% to give us what structural liquidity. This is our second break of structure, which is this. This becomes what point of interest. So this is what we have on V50. We are going to be anticipating this until price come into this zone and then move to the opposite direction. So this is what we are going to be anticipating on V50 index. All right, now let's go to the next pair, which is step 300. Step 300. On step 300, it has been bearish on the weekly time frame, bearish on the daily time frame, and then we have been anticipating a move on the 1 hour time frame. We have been anticipating a move on the 1 hour time frame. There's a higher POI here, but before that time, we already had this. Already had price smashing the target the on the 1 hour time frame, which is this. It gives us this. We have first break of structure, which is this. Then we have a second break of structure, which is this. This becomes what? Point of interest. See, price take out the structural liquidity and then continue the move to the opposite direction. So if you go to the 15 minutes time frame or the 5 minutes time frame, it gives series of continuation that you can take, and then it smashes the target. Then smashes the target. So this one is done. All right, this one is done at the moment. So we will look out for this POI above here. If it comes to this POI, good. If it doesn't, we will anticipate another 4 hour, 1 hour POI to form. Then we can go to the 15 minutes and start taking our continuation. So let's check out the next pair on our list, which is step 200. What do we have on step 200? Step 200, we already have our POI because it's bearish on the weekly time frame already. So we already have our POI on the 1 hour time frame, which is this. First break of structure, we have sweep of liquidity, structural liquidity, and then second break of structure. So we anticipate the price to come here on this 1 hour POI, and if it doesn't, we have a 4 hour POI above. So open your eyes and see. We have this sweep of liquidity, and we have our protected high here. Sweep of liquidity, protected high. We have what? First break of structure, which is this. And then we have price retrace 50% to give us for structural liquidity. And then we have what? Second break of structure, which is this. So the all of these ones becomes what? Point of interest. This is our point of interest. So price will either come to this 1 hour POI or come to this 4 hour POI, and then tap into it and start pushing to the opposite direction. So this is all they're anticipating on step 200. Now let's go to the next pair, which is what? V50 index. We still have a lot of pair, so let's rush through them. Okay, so this V50 index has been bullish on the daily, smashes TP on the weekly, and then it has given us a POI on the 4 hour time frame. So this is what we have on the 4 hour time frame. We have this. We also have this. So this is our POI on the 4 hour time frame. Okay, so now let's check the 15 minutes time frame if we see a continuation on the 15 minutes. So currently there's nothing happening on the 15 minutes time frame on V50. We don't have a POI on the 15 minutes time frame yet that we can actually hold on to. So we can see we don't have anything on the 15 minutes time frame at the moment. We don't have anything yet. This structure is coming from the POI itself, but we are not going to take it until another one form. Then we will know that okay, this is this one we should be avoided, and then we take the next one, right? So that's basically it. Let's check out the next pair on our list. Let's check out the next pair. Let's check out the next pair. We have step 100. Okay, step 100 has been bullish, has been bearish, sorry, and give us a continuation on the 1 hour. So it has tapped into the 1 hour point of interest. Let's check the 15 minutes if there is a continuation. Nothing yet. So this is the finish point here. This is the finish point. So we are going to be anticipating a continuation on this step 100. It should give us on the 15 minutes, we are going to take it. If it doesn't, we are going to start anticipating more of that. Okay, now let's check the V15 index. Most of those pairs I've already marked them out. So if you have been really following these lessons, this shouldn't be something difficult anymore. So this V15 has been bullish, bearish on the daily, bearish on the 4 hour, and this is the continuation it gives on the 1 hour. So out of all those moves, we are still anticipating the price to come into this zone and to give us 15-minute continuation, like 1, 3, 4 times before we take out this target. So this is what we're anticipating on B15. And then let's check the 4 hour time frame. Okay. Sorry that I've already marked this out. So you can easily do your own study by yourself and then understand that before you mark anything, you have a first sweep of liquidity, first break of structure, structural liquidity, second break of structure, and you have your POI. So you're anticipating price to tap into this zone. Once you tap into this zone on the 4 hour time frame, you can start anticipating sell to the opposite direction. Okay, so price has not even tapped into any of our POI yet. So let's go to the next pair, which is V25. V25 has been bullish, has been bearish, but it's not giving any tangible structure that we can really take. There's nothing tangible on V25 at the moment. Alright, so let's go to the 24-hour time frame. The 24-hour time frame, this is the only thing we have on the 24-hour time frame, which is we have a sweep here, have a sweep here, we have a protected high which is here, and then we have first break of structure, we have our structural liquidity, then we have second break of what structure, which is this, and this zone becomes what point of interest. So price is expected to tap into this zone on the 24-hour time frame. Tap into this on the 24-hour time frame. Give us a continuation on the 4-hour time frame. Alright, then we can come to the 15 minutes time frame and start taking sales on the 15 minutes time frame until price take out this 4-hour target, which is this. And we'll look at for another 4-hour, 1 hour time frame until the whole of this target here is taken out. So this is what you are going to be anticipating on V25 index. So let's check out the next pair, which is the 500. What do we have on step 500? Step 500, the weekly time frame is bearish. The weekly time frame is bearish. The 4-hour time frame is kind of bearish too. But then the signs that it's giving, okay, let's just go to the 1 hour time frame. I think we'll have a clearer picture on the 1 hour time frame. There is nothing happening currently at this point. You only have this structure, but it's not really a structure. So I think we are just going to wait for a perfect structure to form on this step 500. You are really going to be careful. Okay, we won't take anyhow trade and lose our capital. We are going to be careful. Let's try to give us something very tangible. Then we can start taking sales on this pair. But for now, we are going to be staying out of this pair. I'm going to be staying out of this pair. So let's check the next pair we have on our list. Okay, you don't need to force any trade. Once a trade is not giving you what you want, once a trade is not giving you what you want, just stay away from it because there are several opportunities. You see, one thing in trading, the urge to be like, I'm missing out on a particular move, I'm missing out on a particular. That is why a lot of people struggle with trading. There are so much opportunity. Just know that the opportunity you miss today, if you miss a good move today, you're going to still have hundreds of it in the future. So learn from every mistake. You don't need to force. I've forced trade in the past and it has really dealt with me. Once you can be very good at technical analysis, once you see that this price is not giving you what you want, just stay away from it. Go to the next one. There's always going to be the next one. That's why I don't advise people that take only trade only one pair. If you want to trade to one pair, at least you can trade to a four, two, three pairs, and then there are so much opportunity that will be presented to you so that you don't force trade unnecessarily. So V31 is volatility, 31 is on the 24-hour time frame is bearish, on the weekly time frame is bearish, but on the 24-hour time frame it has given us a direction. Now price is going to start selling from this POI, and then the end point is going to be on this POI. Okay, this is the starting point, and this here is going to be the finish point. Okay, so first of all, we have what our sweep of liquidity, which is row number one. Row number two, we have what first break of structure. Row number three, price retrace 50% to give us what structural liquidity, which is sitting right here. Okay, and row number four, we have price giving us what second break of structure. Okay, second break of structure. And then what is the rule number five? Price tap into the POI, which is this is what it did here. Tap into the POI, and then it's going to continue the move to the opposite direction. Now the price has tapped into the 24-hour time frame structure. What has price done? Price has given us direction. The next thing for us is to go to the 4-hour time frame or the 1 hour time frame. Some persons will go to the 10 minutes time frame or 15 minutes time frame immediately. But once they start taking trades, they start taking more losses. That is why once price has given you a direction on the weekly time frame and the daily time frame, be patient, go to the 4-hour time frame and 1 hour time frame and still look out for that structure. Once that structure form on the 4-hour time frame and on the 1 hour time frame, you then go to the 15 minutes time frame or the 10 minutes time frame before you start looking for your setup. So let's go to the 4-hour time frame if you are going to find our setup. If you find our setup, good. You can see clearly on the 4-hour time frame, we don't have our setup yet. So let's go to the 1 hour time frame. Now, one of the beautiful thing about this thing is that in a month, you can spot, the month is 30 days. You can spot because synthetic market open from Monday, Saturday, Monday, Sunday to Monday. Okay. So in a month, you can see at least 10 good setup, 8 good setup, 12 good setup, and all of let's say out of 8 you can win 7 trade, if not all the 8. Out of 10 trade you can win 8 trade or 7 trade. So it gives you high win rate, high risk to reward, and you trade with ease. You don't have to trade 3 times, 4 times, 5 times every day. In a week sometimes you don't see trade, in a week sometimes you see 2 trade, 3 trade, but there are high chances that those trades are going to do exactly what you want. That's why whenever some people are not patient using this approach, I always say to myself, maybe they haven't discovered what is behind it. So once I discovered this, I've been using this for some time, for almost 1 year plus now, and this has given me a whole lot of crazy results. So I would advise you always stick to this approach, okay? And this is gonna definitely help change your trading system, right? And if you're having any question, don't forget to always message me on Telegram, ask your question, and I'll always be there to put you through. Okay, so now on the 1 hour time frame, you can see we didn't spot anything currently. There's nothing happening on the 1 hour time frame, right? So what do? We go to the next pair, which is next pair. Our time is almost up. It's 7 o'clock already. So let me just do the rest analysis. Once I'm done with it, we'll call it a day. So the 24-hour time frame, V50, V91S has almost matched its target. Okay, has almost matched its targets. Okay, we have our sweep here. We have structural liquidity. This is the POI. Alright, this is the POI. I'm not going to be marking it down because our time is almost up. If you have any question, you can message me on Telegram and then I will put you through real quick. So this is it. This is 24-hour time frame. It's almost at the target. It's almost at the target. So what we are going to do now is go to the 4-hour time frame and see if you are going to see any recent structure where we can start anticipating. 1 hour time frame. Let's see. Is there anything on the 1 hour? We anticipated this on the 1 hour yesterday, but price has already, this setup has been invalidated because look at, we have our sweep of liquidity here. We have our second break of first break of structure, which is this. We have what structural liquidity, which is here, and then we have what second break of structure. Remember, the protected high will not be taken out, but look at what this price did. It took it out. So now that this has been taken out, if you want to be taking more sell on this trade on the 15 minutes time frame, you are going to start incurring losses because the higher time frame structure has been invalidated already. You can see, look at the protected high, look at the line, it's being crossed. So this simply means it's been invalidated. Okay, we can't take trade on this time frame anymore. So currently we don't have anything on V90s. So let's go to the V75. So on V75, what do we have? V75 has been tanking on the 24-hour time frame, weekly time frame, without even looking back. So look at this. Nothing is happening on V75. On the 24-hour time frame, we don't have a structure. On the 4-hour time frame, we don't have a structure. On the 1 hour time frame, we don't have a structure. See, if you go to this time frame on the lower time, you are going to start seeing your structure. But majority of them are not holding. The reason why I don't stress myself on those, if I see price moving like this, I don't stress myself because we do what they call top-down analysis, and this top-down analysis must be in alignment with my trading system. Okay, if price is trending bearish, I can't just go and start looking for my setup. Price must give me this, must give me a sell like this, a sell structure like this, before I can say, okay, I'm going to start looking for sales. It must give me a sell structure like this. If price doesn't give me this, I don't, no matter how juicy this setup, I don't take it. Okay, there must be a direction. You must know where, I must know where I'm going and where the price is coming from. So once you don't know where price is coming from and where price is going to, hey, you don't have to even take that trade. That is why it's not good sometimes to do, you buy, you sell, you buy to sell, you sell to buy. Price must give you a direction. Okay, this is point A and this is point B. Price is selling from here and this is where it's going to get to. So on the higher time frame, if price is selling on the 24-hour, this is the 4-hour POI. Okay, you know that any high it is, this is where the target is. So you can easily have the confidence and start selling from here. And you sell on the lower time frame. You can go to the 5 minute, 10 minutes, 15 minutes and start selling. Look out for this structure like this and start selling until price take out this low. But you cannot just see trend moving like this and then you start jumping on it. That's not how to trade. So now let's go to the next pair, which is the last step 400, and see what step 400 has. Okay, on step 400, on the 24-hour time frame, the trend is bearish. Right, on the 24-hour time frame is bearish. but it hasn't given us a structure. On the 4 hour time frame, is also what is it what is happening on the 4 hour. On this time frame, on the 4 hour time frame, no structure on the 4 hour. Let's go to the 1 hour time frame. Unfortunately, we still don't have anything on the 1 hour time frame. Okay, so we've done analysis on the 12 on the 14 pairs so far, and our time is up already. So the only setup we have currently is this setup on the V25 1s. We have this on the V25 1s. So this is what we have on V25 1s. So we're anticipating the price to come into this POI. Once you come into this POI, we can start buying to the opposite direction. So I'll be on the lookout. Whenever it drops to the POI, I will alert everyone in the community so we can take the trade. And it's also trying to do something here, which is something, this is actually beautiful. Okay, so price is trying to give us something here. If it does, fine. If it doesn't, fine. But let's just be on the lookout for this one. This is a more better option. Okay, so the price drop here, we are going to start give us our confirmation, we'll move to the opposite direction. So if this is your first time of coming across the channel and then you get value from this today analysis, do well to like, do well to subscribe, and so if today is the first time of coming across this channel, okay, and you get value from it, do well to like and do well to subscribe and join our Telegram community. And if you are looking forward on how to trade volatility indices, okay, the broker we use is Deriv Synthetic Broker, okay, Deriv Broker, and the link to registration is in the description of this video. All you have to do is click on the link, register, use your details, your email address, and then you fund your account so we can start taking trades together. Okay, so don't forget to share this live to your friends, your family, those that are interested in trading, so we can always learn trading together. And every day 6 a.m. to 7 a.m. we do the analysis on this channel. So if you come today, don't forget to be available tomorrow. Come with everyone that you know that they are interested in trading, and trading will actually change your life. So we are locking in for 2026. All right, so same time tomorrow, 6 a.m. to 7 a.m. I'll see you on the other side. Don't forget, if you have any question, you can write me on Telegram. The link to the Telegram is in the description of this video. And if you check the bio of this channel, the link to the Telegram is also there. So I'll see you on the other side. Do have a nice day. And don't forget to apply risk management in whatever you're doing. Take care.